Now speaking, Simon Mays-Smith, Vice President, Investor Relations. Autodesk reported their first quarter results of fiscal 24 in a conference call broadcasted live via webcast. On the line were CEO Andrew Anagnost and CFO Debbie Clifford. They discussed their outlook, future results, acquisitions, products, product capabilities and strategies. Autodesk may have made forward-looking statements that reflect their best judgment, however actual events or results may differ materially. Their SEC filings such as their most recent Form 10-K and the Form 8-K filed with today's press release contain important risks and other factors that could cause the actual results to differ from those in the forward-looking statements. All non-GAAP numbers referenced in the call are reconciled in their press release or Excel financials and other supplemental materials. The year-on-year comparison was used for any numeric or growth changes mentioned in the call. Now speaking, Andrew Anagnost, Chief Executive Officer. Autodesk reported strong financial performance for the first quarter of fiscal 2024, including 12% revenue growth in constant currency and record free cash flow. The company's resilient business model and geographic product and customer diversification enabled it to deliver healthy margins and positive results despite a challenging macroeconomic policy and geopolitical environment. Leading indicators such as product usage, bid activity on Building Connected, and cautious optimism from channel partners remained consistent with the previous quarter. New subscription growth decelerated in North America but accelerated in EMEA due to customers' commitment to transformation into Autodesk. This commitment is reflected in larger, broader and more strategic partnerships, improving renewal rates, consistent net revenue retention and growing adoption and usage of their products. Autodesk is executing its strategy through the economic cycle with disciplined and focused capital deployment, which enables them to remain well invested while mitigating risk. They are investing in next-generation technology and services, end-to-end digital transformation and leveraging their key growth enablers. Flex, their consumption pricing model, has seen success as it allows existing and new customers to try new products with less friction and has moved up to the top 10 products on their e-store. Autodesk remains committed to evolving and innovating in order to forge broader and more durable partnerships and to enable a better world designed and built for all. Now speaking, Debbie Clifford, Chief Financial Officer. Amid the more challenging macroeconomic environment and ongoing headwinds from currency in Russia, Autodesk's Q1 was strong. Renewal rates improved quarter over quarter such that current remaining performance obligation growth was the same as last quarter, demonstrating customer commitment to Autodesk and some customers elevating their relationships with multiple subsidiaries co-terming to a single renewal date. Total revenue grew 8% and 12% in constant currency, with AutoCAD/LT and AEC revenue growing 10%, manufacturing revenue growing 13%, and M&E revenue growing 9%. Direct revenue increased 15% in constant currency and represented 35% of total revenue. Net revenue retention rate remained within 100% to 110% at constant exchange rate. Billings increased 4% to $1.2 billion, primarily reflecting growing renewal rates and early renewals, partly offset by annual billings for most multi-year contracts starting March 28. Free cash flow was $714 million in the first quarter, up 69% year-over-year. Autodesk purchased 2.7 million shares for $534 million, reducing total shares outstanding by about 3 million shares. For fiscal 24, Autodesk expects revenue to be between $5.36 billion and $5.46 billion, up about 8% at the midpoint or about 13% at constant exchange rates and excluding the impact from Russia. Non-GAAP operating margins are expected to be similar to fiscal 23 levels, with constant currency margin improvement offset by FX headwinds. Free cash flow is expected to be between $1.15 billion and $1.25 billion, implying a 41% reduction compared to fiscal 23 primarily due to the shift to annual billings, a smaller multi-year cohort, FX, and higher cash tax rate. The company is managing its business using a Rule of 40 framework with the goal of reaching 45% or more over time. Now speaking, Andrew Anagnost, Chief Executive Officer. Autodesk is continuing to invest in their cloud-based solutions, which drive efficiency and sustainability for customers. In the first quarter they saw good growth in AEC, architectural engineering and construction, and were chosen as a construction management platform for Singapore's tallest skyscraper. HNTB, an employee-owned infrastructure solutions firm, expanded its EBA, Enterprise Business Agreement, with Autodesk and was able to leverage VR collaboration to train facility management and first responder teams on real-life scenarios. DPR, one of the top 10 largest general contractors and construction management firms in the U.S., extended its partnership with Autodesk and unified on Autodesk Construction Cloud. This will connect stakeholders throughout the project life cycle and reduce risk during construction. In manufacturing, customers are investing in their digital transformations and consolidating on Autodesk's design and make platform to grow their business. For example, Riddle increased its EBA to include Fusion to optimize and manage product manufacturing, maximize internal automation, accelerate speed to market, and respond quickly to changes in demand. Another customer migrated from their existing provider to Fusion with the machining extension due to its intuitive UI, cloud capabilities, and simple integrations with existing software and machines. Autodesk is also investing in the workforce of the future by partnering with higher education providers across the globe and launching the Fusion Design Challenge. Additionally, they are hardening their systems by tightening concurrent usage of named user subscription and expanding the precision and reach of in-project product messaging. All of these initiatives are expected to drive further conversion and growth in the second half of the year and beyond. Barclays analyst Saket Kalia inquired, "Andrew, did you see any softness in partner checks during the first quarter? Have those trends continued into Q2? Andrew Anagnost replied, "Saket, we saw the usual trends with large events like this. We noticed partners and teams trying to push deals into the event in order to close them. We try to align these events with quarter end to avoid this conversation. After the event, business returned to expected levels and remains so at the beginning of the next quarter. We haven't seen any additional macroeconomic factors influencing our quarter." Debbie Clifford replied, "Overall, our leading indicators remain largely the same as last quarter. Usage and bid activity on Building Connected has grown modestly. We've noticed cautious optimism from our channel partners. Subscriber growth declined slightly while renewal rates improved. Europe saw better performance while the US was weaker and Asia remained steady. Our current RPO growth of 12% is an indicator of future success. Ultimately, we're aiming to set ourselves up for success in fiscal 24 and beyond." Barclays analyst Saket Kalia inquired, "Debbie, what drove the strength of cash flow this quarter and how are you thinking about cash flow for the rest of the year?" Debbie Clifford replied, "Q1 free cash flow was strong, due to an increase in cash collections from the last month of fiscal 23 billings, favorable linearity and early renewals, and a federal tax payment extension. We expect to generate about half of our free cash flow in the second half of the year, with a heavier weighting in Q4. This is due to the switch to annual billings, along with the early renewal billings that were pulled into Q1, and the positive impact on cash flow from the tax payment extension." Griffin Securities analyst Jay Vlishauer inquired, "Andrew, what operational or execution changes are you making to your sales model and how will they affect demand generation and channel compensation?" Andrew Anagnost replied, "Jay, the exploration of new models with Flex is driven by our customers' desire for a more self-service, e-store experience with local support. This allows us to gain visibility into usage patterns and share that information with partners so they can better understand our customers' needs. Through this process, we have been able to learn a lot and make improvements based on feedback. Debbie, could you please elaborate on what we've learned about Flex from this process?" Debbie Clifford replied, "We launched our Flex agency model in Q1 and have gained valuable insights since then. We are focusing on testing and learning, while ensuring all stakeholders involved have scalable processes. Having access to more data has allowed us to better forecast and plan for the future." Griffin Securities analyst Jay Vlishauer inquired, "Debbie, looking ahead to the rest of the year, which 2 or 3 volume drivers do you think will be most important for the business?" Debbie Clifford replied, "It's an excellent question, Jay. Investor Day was not long ago and it hasn't changed much. We're continuing to drive volume from AEC investments, infrastructure growth and construction. This quarter we saw a strengthening of renewal rates, which is a net volume driver for Autodesk. This is due to the investments in our customer success teams who are doing an excellent job driving renewal rates up and ensuring success with our customers." Stifel Financial Corporation analyst Adam Borg inquired, "Andrew, how are your efforts to broaden the company's operations into the owner market resonating? What progress have you made towards expanding into AEC?" Andrew Anagnost replied, "Tandem is performing well, with an increase in monthly active usage rates and direct collaborations from owner-level customers. This has created a lot of visibility, interest and focus in the market for our digital twin technology. We're very pleased with the progress." Stifel Financial Corporation analyst Adam Borg inquired, "Debbie, could you provide more detail on the repurposing of 250 roles in the quarter? Debbie Clifford replied, given the current macroeconomic uncertainty, we're taking a cautious approach in managing our business. In Q1, we repurposed roles to reinvest, and in Q2, we proactively slowed the pace of our hiring to limit spend. This provides us with more investment flexibility, allowing us to set ourselves up for success in fiscal 24 and beyond. Robert W. Baird & Company analyst Joe Vruwink inquired, can you explain the deceleration of new subscriber growth in the Americas relative to product usage trends? Andrew Anagnost replied, no, our monthly active user trend was consistent with what we anticipated. We saw a slight decrease in velocity in the Americas and an increase in Europe, which is in line with the indicators we've monitored. This predictive behavior should continue moving forward. Robert W. Baird & Company analyst Joe Vruwink inquired, have you seen an increased interest in AI capabilities, such as SpaceMaker and Fusion's generative extension, and have any product roadmaps been altered based on the pace of innovation? Andrew Anagnost replied, we've been developing and deploying machine learning models in our applications for some time. Recently, ChatGPT has made AI more understandable to everyone, allowing us to have meaningful conversations about what it can do in its role as an assistant or co-creator. We've been working on this for a while, it's not a new concept for us. With Construction IQ, we rolled out Forma, which is even more enhanced with machine learning. Our Audi lab has published work on advanced topics such as large models and 3D model representations using machine learning. This helps customers understand how our technology can enable co-creation, complex designs, sustainability decisions, and optionality. We will continue our current course of development but may speed up progress with larger and more complex models. Bank of America Merrill Lynch analyst Michael Funk inquired, Debbie, can you explain the relationship between slowing sub-growth and usage being strong? Is it a result of customers tightening their belts due to the uncertain macro environment? Or is there another factor at play? Debbie Clifford replied, thanks for the question. The key factor driving our sub-growth in Q1 was the end of sale of multi-year upfront contracts. This impacted the demand pattern for the quarter, resulting in higher volume before launch and lighter demand post-launch. However, we've seen a bounce back in demand over the last several weeks, which is generally in line with expectations. Bank of America Merrill Lynch analyst Michael Funk inquired, Debbie, could you provide more detail on the EBA renewal pattern and what elements are driving increased adoption in the second half of the year? Debbie Clifford replied, in response to the question, I'll say, we expect Q2 revenue growth deceleration, followed by growth acceleration in the second half of the year, driven by FX reductions, and a big cohort of EBAs renewing in Q4. These deals have had good adoption and usage, indicating they will come through as expected. We have our full-year financial goals in sight and are positioning ourselves for success in fiscal 24 and beyond. RBC Capital Markets analyst Matt Hedberg inquired, Andrew, what changes have you seen in the adoption of SaaS and cloud technology within the construction industry since the end of the pandemic? Are field workers starting to embrace the technology more? Is it a generational change, or are there other catalysts driving adoption? Andrew Anagnost replied, the rising adoption of our technology is becoming its own catalyst. We're seeing solid growth in construction and significant adoption in EBA accounts. This is leading to a flywheel effect where those who adopt the technology have higher bid precision, accuracy, and ability to execute during projects, manage costs more effectively, and estimate better for future projects. Additionally, the inability to hire enough people is driving companies to seek productivity gains from technology. Together, these two factors are creating a momentum that I don't see slowing down anytime soon. Citi analyst Tyler Radke inquired, Andrew, could you comment on the record-level bid activity in Building Connected? Is this a sign of end-market health, or a result of competitive position and digitization trends? Also, what caused the slowdown in new subscriptions this quarter? Was it specific end markets or something else? Andrew Anagnost replied, Building Connected is showing activity in the bidding process, which is a positive sign. There is still a backlog of projects that customers must work through before they can move forward, yet the trend of bid activity indicates a strong U.S. market. We saw no hotspots in Q2 regarding deceleration or rebound in volume. It was consistent across the board. Citi analyst Tyler Radke inquired, are you expecting EBA renewals in the second half to reflect the net expansion rate typical of your company, or is the current environment expected to impact that? Andrew Anagnost replied, I'll let Debbie follow up with more details, but the EBAs we renewed during the pandemic experienced a decrease in activity and usage. We're seeing a significant difference compared to the rest of the company when it comes to this cohort. Debbie, could you provide further insight into this? Debbie Clifford replied, I'm confident that our customers will renew at reasonable levels. We saw high adoption and usage of our EBAs during the last fiscal year, even when the economy was in an unusual situation. I'm confident that our guidance is set at a reasonable point. Deutsche Bank analyst Bhavin Shah inquired, Andrew, given the debt ceiling, what impact should we expect to see on federal deals and the pace of that business? What is the status of the Fed ramp model rate for Docs and 360 Collaborate Pro? Andrew Anagnost replied, yes, we have submitted all of the necessary paperwork and Autodesk systems are ready for Fed ramp certification. We're now just waiting for the government to respond and grant approval so that we can move forward. As for the debt ceiling, it is difficult to speculate on the situation in DC, but what I can say is that the things that are important to us here at Autodesk are likely bipartisan priorities and therefore should not be adversely affected by the current climate. Deutsche Bank analyst Bhavin Shah inquired, can you provide more detail on the disruption, timeline and expected performance improvements related to combining sales organizations in Construction Cloud? Andrew Anagnost replied, we recently merged our independent construction team with our mainline sales team to bring a sharper focus on the territory business, as well as design and construction accounts that have competitive advantages. This transition may cause some short-term disruption, but we are confident it will pay off and increase benefits over the next quarter or two. J.P. Morgan Chase & Company analyst Steve Tusa inquired, can you remind us what part of your business is exposed to macro trends such as a decline in ABI or new office markets? Additionally, is the simple math of half over half free cash flow implying negative free cash flow for the second quarter accurate? Andrew Anagnost replied, in the AEC sector, there's a dynamic of puts and takes with some areas of activity declining while others are increasing. For example, people are downsizing offices, which is creating competition for leasing new space and leading to investments in modernizing office space. We've taken this into account when forecasting our business and pay attention to usage of our products as leading indicators. Debbie Clifford replied, in terms of free cash flow, I anticipate a negative effect in Q3 due to the tax payment extension. To better predict quarterly numbers, I suggest reviewing my previous comments on linearity of free cash flow for the year. MoffettNathanson analyst Sterling Auty inquired, given the comments about acceleration in the second half, are you expecting the peak macro impact to hit next quarter or is this due to improvements in Autodesk execution? Debbie Clifford replied, I would say that we have built our guidance for the year taking into account all macroeconomic conditions. What we saw in Q1 was consistent with our expectations, and we remain confident in our 7 to 9% guidance range for revenue growth. The change in linearity in our revenue is driven more by seasonality, EBAs accelerating in the back half of the year, FX and the absence of Russia drag. MoffettNathanson analyst Sterling Auty inquired, Andrew, how do you see Autodesk generative AI, LLMs, conversational interfaces impacting pricing and ARPU in the long term? Andrew Anagnost replied, I think Autodesk is offering a unique blend of value to our customers. We are providing significant value in certain areas and charging for that, while also improving productivity, enabling them to gain a competitive advantage. This mix allows them to be more efficient in one area and more creative in the other, ultimately helping them succeed. Simon Mays-Smith replied, thank you, Latif. We appreciate everyone joining us for the call and look forward to providing updates next quarter. If you have any questions, please email us. Latif, back to you.